Hey everyone, me Kevin here. So a lot of you know that over the last few weeks, I've taken some really red days in the stock market and I've bought more money in stocks. A lot of you who are in the courses, you get my buying and selling alerts. I've been doing a lot of buying lately and mostly on those bigger red days. But I've been getting a lot of questions. Kevin, why? Why would you invest before the election? The market's surely going to crash after the election. And no doubt that is possible. After all, think about the madness that's going on right now. COVID cases are spiking in what's being called the third wave in Europe. The 14-day average case count in the US is over 36%, or up over 36%. Vaccines remain distant, debt levels at corporations are piling up, layoffs are rising as stimulus remains uncertain, the eviction ban ends in 2 months and 10 days. I can't believe the end of the year is in 2 months and 10 days, but good riddance 2020. Forbearance plans will come to an end at some point thereafter. Banks are, and have really tightened their lending standards. And now there's even fear of the dollar collapsing and maybe we should just go rush and buy gold. And oh my golly, it is overwhelming. There is so much fear right now. And this is where I want to introduce you to something that I like looking at. And I want to introduce this to you because I think it's really helpful. We've all heard the phrase before, be fearful when people are greedy and be greedy when people are fearful, right? That's the Warren Buffett quote. There were a lot of people on YouTube saying, oh yeah, everybody's fearful. You should be greedy right now and buy. And they weren't buying stocks. I was buying stocks in March and April and May and June like crazy. And now I want to show you this cool chart that almost gives you a little bit of a guide as to maybe when the best times to invest are, without even looking at fundamental valuations or anything. It's something that I just call the fear index. Now, technically, this is called the Economic Policy Uncertainty Index for the United States. Blah, blah, frickin' blah, whatever. And the point is, basically, when the little spikes are high, that means fear in the economy is high. And when the spikes are low, that means fear is low. Well, if we kind of zoom in just to get it, and we could see here in 2008, 2009, it was high, right? 2010, 11, we're worried about the second wave of foreclosures, the shadow inventory of foreclosures is coming, and when all those fears subsided, you kind of see between 2013 and 2020, nothing. It's like flat. It's pretty flat, right? And if we zoom in here to only look at 2020, look at that fear chart. I mean, this chart basically tells you when you should have frickin' invested. Like, oh, nope, don't invest in February. Ooh, end of March, April? Yep, sounds good. What was the bottom of the market? March 23rd and April 3rd. Those were the two bottoms of the market. The W-shaped recovery happened within 10 or 11 days of each other. And then since then, the fear index has gone down. And right now, it's kind of like, if we just zoom into 2020, it's like, the fear index is kind of low again. Should we be investing now? And it's true. Maybe it's not going to be as lucrative to invest right now. In fact, the other day, if you look at the stocks playlist, I did a video on Howard Marks. That's not like Karl Marx, like some were saying in the comments. Howard Marks is a hedge fund manager, and he mentioned, hey, look, he believes you should proceed with cautious optimism right now. That maybe, tech is a little bit high right now, but those valuations could be fair given the change in dynamics we've seen in the world right now. And watch that video. It goes into a lot more detail. I don't want to be a shill for Howard Marks. I don't agree with everything he says. Watch that video. You'll get a lot more detail. But here's what I want to do for you. Look at this. So I put a screenshot of this fear index on sort of an annotating software here. And I put a red line where we have peak fear recently on October 10th. The fear index number was like 400 something. So I put a red line there. And then I put a red line where we are now at about 166. And then what I did is I put green lines, which you can see right here, at basically February 2020 going back to about the beginning of 2013. And then I put them at sort of the bottom here, right? This green line here at the bottom. So what I really did is I put a range bound on where all these crazy swiggly up and down lines are. Okay, cool. So here's what I want to ask you. And this is by no means like a guarantee. This is just I'm gonna say that in 10 years from now, I believe that I'll be able to look back on this kind of like you could look back at 2009 here and go, man, kind of wish I invested over there where all that volatility was. But anyway, I believe, looking at this, that I would personally rather invest when the fear index is in this level, which it wasn't between 2013 and 15 and 2020 rather, but it is now. Look at that. See that over here? That's where the fear index is now. It's totally in that space right here. We are within that right now. I would rather invest there than honestly invest in this squiggly line over here. So if you want kind of like a squiggly line explanation of the market, there you go. Now, here's practically what I'm doing. I do still have concern that debt is very, very dangerous on stocks. Margin debt is risky, and it's not worth bankrupting yourself by going 100% margin, or honestly, even like 35% margin or 30% margin. It's too much. It'll cause way too much emotional pain in you to have too much debt right now. So I've fortunately reduced most of my debt to where I only have 8% margin outstanding. But here's my opinion of what's going to happen after the election, and why I think after the election might be a little bit of a different time than where we are now. See, when the election happens, and this will help us answer the question of the title, right? Should we buy or sell before the election, or should we buy or sell after the election? Well, here's what's going to happen on the election time. On November 3rd, the evening of November 3rd, we will have clarity, more clarity, on the following: tax policy, the way we're going to handle COVID, the way we're going to handle vaccines, the way we're going to handle stimulus, the way we're going to handle forbearance, evictions, rental protections, back rental protections for tenants who are behind on rent, corporate tax rates, tax credits to individuals. We will know all of these things, and we will have an idea as to what 2021 is going to look like, either under the same or a new administration. Are we going with green energy, or are we going the way we've been going? Are we going with higher corporate tax rates, but maybe more investment into that green? Or are we going with potentially slightly lower corporate tax rates via Donald Trump? These are all the things that will become much more clear on November 3rd. And what's interesting is when there is clarity in the market, uncertainty goes away, the fear index falls, we tend to see less volatility and less craziness in the stock market. Maybe we'll trade sideways, maybe the market will go up, maybe the market will go down, I don't know. But solely looking at a point of, well, where's the fear play in the market right now? I think there's going to be much more fear before the election than after the election. And so that's why I'm putting more money into the market now. I've got my margin to a level where I'm comfortable, 8%, and the extra money that's coming in, that I'm receiving as income, I'm spending that on investments again. And I'm not pulling the trigger on individual purchases right now because things are a little bit higher. So instead, I'm spreading out my money. You could see exactly how I'm spreading out my money by going to metkevin.com/1337V12. It's also linked down below, the top 40 stocks, and you'll see exactly how I'm spreading out my money. So that way, I'm still investing in the market. I'm trickling in every day. The market's a little red. Over the last 3 weeks or so, I've been doing that. And I'm spreading out my money to be in play. I'd rather be in play when fear is high than be sitting on the sidelines while fear is high. That's just my POV. Hopefully that chart helps you. It's certainly not like a fundamental analysis of the market, but it's just something else to think about, that in the long run, you tend to look back going, yeah, the high fear times, those were the time to invest. So another perspective here. If you've appreciated it, please consider sharing it. And folks, we'll see you in the next video.